instead. Okay, so just a second. Okay, I just have to post this on Facebook and then we get started. Okay, just a moment. Okay. Okay, sorry about this this thing. I wasn't aware of the change in settings. I'll have to come up with something else for for sharing to Facebook. Okay, good morning everyone and welcome to another episode of the Crypto Hour. Today is Friday, the 26th of April. And it's the first Crypto Hour since the halving. Okay, so we were talking last week of predictions to where will we be in 1 hour after, sorry, 1 day after the halving, where would we be a week after the halving? And I must say that looking at the results, I mean, they were shocking, absolutely shocking. Okay, so nobody got within $5,000, in total of prediction of 1 day and 7 days. But let's see where we are. First of all, Eric, do you mind, as usual, doing the honors? Okay, the co-host. Okay, let me share the screen. We'll have a look at this in a second. So this is where we were. Let me see, Friday. I got this wrong, sorry. Okay, so that's the time of the halving. This is where we were on Friday. So pretty much Friday 8 a.m. We were up here on Friday about 64.5. So at the halving, which was early hours of Saturday morning, we were about 63.5. Okay, and so not that far away from where we were on Friday. And where are we today, a week later, is exactly where we were 1 week ago. Okay, so nothing really happened. All these halving there's been talked about for months and months. And as you can see, it's not an immediate event that shows a big difference in a matter of hours or days. But it's something that would show its effect in an accumulated way. Now, I'll just bring here a text box so we can write. So roughly the difference that in the production of Bitcoin after the halving is 450 Bitcoins a day. Okay, now less than before the halving. Okay, so that's the difference. If you want to see how much it is at current value, we can do that. I'll bring up the calculator. So today is about let's call it 64,000 times 450 is roughly about $29 million at current value. So let's call it 30 million anyway. So the difference now in supply of Bitcoin is 450 Bitcoin. So per week, we have to multiply that by 7 because obviously, although the ETFs trade 5 days a week, Bitcoin doesn't sleep, and it trades 7 days a week, and the blocks are created 7 days a week, 24 hours a day. So 7 times 428, so it's 3,150. Okay, 3,150 Bitcoins per week. Okay. And again, shall we do it? Carrying on. So let's do it times 30. So we do a month. 50 times 30. It's roughly 13,500 Bitcoin per month. Now, if you think that, in this, let's say the price is roughly a function of demand minus supply. Okay. Now you see, and the supply now has become slightly different than what it was before. Sorry. Come on. Now, special, the price is equal a function now of demand. Demand, obviously, we can't estimate it as such. That supply has become every day, daily supply has become minus and I messo the formula. So supply is become is daily supply minus 450. Okay, so if you accumulate that over time, we can see the effect of basically just imagine that these Bitcoins are in the hands of somebody like an ETF or a big holder or something else, and the way it affects demand. So when we go and have a look, at and the clearest example that we have of accumulation in lately has been the Bitcoin ETFs. What did I have? Sorry, it's not here. The Bitcoin ETFs. Let's have a look at what difference that has made. So just this week, for example, this is the last 4 days. Obviously, we got data up to yesterday. So that was plus roughly 1,000, plus 1,500, minus 300, minus 3,700. Okay, so this is the whole flow of funds into or out of the Bitcoin's ETFs. It's been 3,700 Bitcoin. And we say that, it's each week we are now generating 3,150 Bitcoins less. So there is less supply. So this is less Bitcoins that can be sold on the market to bring the price down. Okay. And so if you see what difference that will make over time, already after 1 week, if the Bitcoins, the less Bitcoins that are being produced were actually accumulated in a fund, they already be more than the last one of the funds, which only has 1.1, so 1,170 Bitcoin. After the second week, you already have more than the second fund, the second to last. After 3 weeks, it would have more than all the funds apart from the first 4. So can you see how it's over one day, 1 week, it won't make a big difference, but over time, the accumulation, or less presence on the market of the Bitcoins that are being generated through each block that is created, the cumulative effect that they have on the market. So, we won't see generally, it's not that the halving has an effect, the day after, like this, like the moment, the second after the halving happened, you won't see any difference because, the number of Bitcoin is pretty much the same. There's only a difference of 3 Bitcoins every 10 minutes, but that 3 Bitcoins over 10 minutes over time become a huge amount. So sometimes we overestimate, and I can see doing the prediction. I mean, predictions went from, for the day after the halving, and remember that we were like at 64,000 when we did this. The predictions went from 42 to 73. Okay. And for the 7 day after, again, predictions went from the lowest, I think, was 61. 60 was the lowest, and the highest 75. Now, what I have done, the reason why I've done this, because I wanted to show you, I wanted to save you a lot of time in looking at YouTube or looking on Facebook to all the people that do predictions, and they say, oh yes, Bitcoin is going to be 40,000 1 week after the event, or Bitcoin is going to be 200,000. I mean, the reality is that this will play out over time. Okay, so don't worry too much of what's happening tomorrow, but start zooming out and pay attention to what will happen in the next months, weeks and months, because I believe we are, combining the this halving with also the awareness of cryptocurrency that there is now in the market, and the movement that there is towards this product to become to move towards maturity. Excuse me. Moving towards maturity, I think we are witnessing a generational event. Okay, so again, don't worry too much about what cryptocurrency will do in the following weeks, but look at this again in 3, 4, 5 years time, and you'd be very surprised that how far we will travel from this point. Okay, now let's go back and have a look at the events that we had this week, and why, for example, we see this this drop in prices that we have seen as it was kind of like a gradual growing in prices since the halving, and then we had a kind of like a steep drop yesterday. Now, obviously, as I say, crypto is not an island, and things happen because of economic event. This week we had some manufacturing figures, and also we had inflation figures, and again, all across the world now, inflation is starting to tick back up. So the effect of this has been to in a way, to make the cutting of interest rates a little bit further away in time. And other big things, like a bit of a shock news, was actually GDP in the US. Now, as you can see, it's markedly lower than expected, kind of less than half of what we had in the last quarter, and even a big drop compared to the expectation of 2.5%. I mean, this is not the final figures, but just the advanced GDP figures. But it's if this is confirmed, it's actually quite a big big drop from expectation. And this morning we have the Bank of Japan interest rate that was kept the same as expected. but the Central Bank of Japan is actually starting making noises about intervention again, saying that the latest moves in their currency, in the forex exchanges are not desirable. So and the yen is at not all-time lows, but it's a levels now they haven't been seen since the 1990s. So some of these things, especially the GDP figures are affecting the market in a negative way, and we'll see that in a variety of assets, not just crypto, but obviously gold and the stock markets are also reacting quite badly at that. We go back, sorry, go away. You can see now how the stock markets have started correcting. There was kind of like yesterday was a seesaw day. You can see that there was like a big drop and then it kind of recovered part of the way, finishing pretty much where it started. But we've since beginning of April now, we had a correction of about 7%, and we'll see what this takes us. But we'll have a look at the second at the economic indicators that can in a way tell us where the cracks are starting to appear, because the thing is that sometimes the news, and especially economic news, are reported in a way that defy logic. And I want to show you a few screenshots without being too heavy, but this is kind of the expectation now compared to the expectation just 4 months ago in January, 3 months ago in January, what the expectations are for interest rates in US interest rates in 12 months. Now, in January, we were looking at 28% of the probability was of interest rates at 4% or below, and the possibility of staying at this at the current rate, 5.25% or higher, was very low, or just about 10-12%. And can you see now how the expectation of change in such a small period of time? Now the expectation of 4% or below now is priced in at only 15%, and now there's a 14% chance. So it's the highest probability is that we will stay at this level for the next 12 months, and there's even a sizable chance that we might see a further increase in rates. Now, why? Obviously, the rates are being increased because they want to get us to spend less to bring inflation down. So let's have a look at how that affects the economy. Now, can you see the real growth? And this is the National Bureau of Economic Research. So it's a government body in the US. And can you see the expectation? We're going from a growth of 2.4% in December to a current growth rate of just above recession of 0.5%. Okay, because the effect of having interest rates higher for longer are felt in the economy, but again, there is a lag between when these decisions are taken and when the effect is felt in your pockets. Now, if you see this is the amount of proportion of income that is spent in servicing debt, for people like you and me. And you can see the 20 years average is about 15.7%. And this data, by the way, is 6 months late. Okay, so there is a lag of 6 months of when the data is released, so that amount now would be well above 16%. But because we locked in rates, they're being close to 0% for a long time. It's the same as if you have a mortgage. Sometimes you lock in a fixed rate, and even if the interest rates move higher, you only feel the pain when you need to renegotiate your mortgage or your loans. It's the same thing here. So these levels have gone, the debt servicing ratios have gone below the long-term average because interest rates have been low for a long time, and people have locked in loans for a medium to long term at very low levels. So even with that, we can see now the trend and the way that it is now trending up in end of 2022, beginning of 2023, and now we are back at the long-term average with a rising ratio month by month. This is for the US, but let's have a look for the rest of the world. So can you see this? Australia, Canada, Switzerland, the EU, the three biggest economies in the EU, the UK, Sweden, Korea, and the US. So the first table here at the top is just the ratios over time from 2022 to 2023, and we can see the countries in general, they spend the highest amount of their income, disposable income, in servicing debt. And Canada, Sweden, and Korea being the ones that have worse ratios. Australia is catching up very quickly as well. Okay, and the one thing, the second table will tell you what the deviation of the ratios from the long-term average. And you can see the red is where this is getting, now the numbers are above the long-term average, and green is where they are below the long-term average. Again, see Australia, there's quite a lot of you today from Australia, and the numbers have been getting progressively worse. So Canada and Switzerland as well. What this is telling us as well, that these increase in interest rates are taking a long time, for example, to play out in the EU. Already the picture hasn't really changed in the EU. The UK, again, is going below average, but now we are again moving back in the wrong direction. And again, for the US, again, where these low rates have been locked in, and we were kind of below average, and now we are moving back. We are pretty much back at the long-term average rates. So the last one is probably the more interesting one, because it shows you what really happened from the end of 2021. So once we've taken out, obviously, the crazy period of 2020 with the beginning of the pandemic, at the end of 2021 to the end of 2023, and we can see, so the only really outliers is the EU, where the numbers haven't really changed very much, but and Sweden, there was the highest, had the highest ratio in 2022, which has slightly now been reduced, but still at the highest that there has been. But you can see the trend in other countries. I mean, it's clearly probably Australia is the most obvious, and all of you probably that live in Australia can tell me, probably can feel the effect of this in your pockets, as the you have to spend more money for your mortgages, for your loans, and everything else, which leaves less to spend on anything else. Also look at the US as well, because you can see the other charts are green, but you can see how the debt cliff is actually waiting, is something that's waiting to hit the markets. It's not quite there yet, and especially in the EU. Doesn't mean the EU is in a good place. It's just that they have a big refinancing cliff. Over the next 12 months, they will need to come out in the numbers. But you can see the direction that we are going across the world. So how that can be reconciled with something like this, kind of expectations of, interest rates to be higher for longer, and expecting almost like to have no effect on the economy, because we're expecting the stock markets to make new highs and become more and more valuable. It just doesn't make sense. Okay, so these are where the cracks are starting to show. Okay, so it tells you which economies are at a little bit more in danger. And funny enough, it's not, at the moment, at least not yet, it's not the US as such, but it's other economies that are showing the strain, like Korea especially. And even Switzerland, it's a big chunk of national incomes they're spent in servicing the debt. And Australia obviously is probably the one that's at the worst a trend from 2021 to 2023. So and it shows as well, the inflation in Australia has come down quite a lot. But at the same time, at the moment, they are struggling with these very high now debt service ratios, but it's sticky inflation that doesn't get below 3.5%. So it puts the central banks in a difficult spot. Now, if we go and see, and now we move on to Bitcoin and a couple of things. This is again, although the flows in the ETFs have slowed down in the past 2 or 3 weeks, it's interesting to see that if you see the net assets accumulated, this is in all ETFs over time in the first 72 days, so up to yesterday. Now, the 3 of the top 4 are Bitcoin ETFs. Okay, and even see this top 3 are way above the gold ETF, which was launched in 2004. So just to put into perspective, the fact that there is a slowdown in accumulation in these funds is nothing to worry about as such, because it's normal that when you have such a big influx in a short period of time, that there is a pause for reflection. But what kind of could shake things up is what we're seeing next week on the 30th of April. So in 4 days, we have the spot Bitcoin ETFs and Ethereum ETFs that will start trading in Hong Kong. So although the Bitcoin ETF already exists in the US, this is the one we've been reporting on for a while, there might be like a fee war breaking out in Hong Kong over the Bitcoin ETFs. And you can see now the Harvest ETFs is going to be launched. Even after 6 months, we're only at 0.3%, 0.3% fee. And at the moment, the launch is 0%. So we'll see what effect these will have, especially because of the Chinese access to these funds. And the other thing that will be really interesting to see is how much will the Ethereum ETF be able to attract in funds. So that will start on the 30th to say 27, 28, so on Tuesday. So we'll see. By next week, we're probably going to have the first few bits of data to have a look at to see if it's going to be something meaningful or not. And another thing about the Bitcoin ETFs, out of all the over 10,000 registered funds in the US, not just the ETFs, but also mutual funds and etc. IBIT currently ranks, which is the BlackRock ETF, currently ranks second in year-to-date flows. So it's just the way that these funds have accumulated interest and millions is nothing nothing less than absolutely stunning. And again, the effects of this will be seen over time. Now, there's something that I noticed, kind of interesting bits there while scanning the news. Something that I wanted to share with you. And this is like Coinbase ads in the US, and equating if money was if pizza was money. Okay, now I just have to see. Let me just see if I need with your settings. I want to make sure that you can hear. Where is it? Do you know, guys, where can I have the so I think it's this one probably. Original sound for musicians. Okay, so I want you to be able to hear the volume. Yeah.
Can I get a large pepperoni pizza for delivery?
If pizza worked like this, you wouldn't like pizza. But this is pretty much what happens to your money whenever you spend it or send it. It's a complicated system full of middlemen and fees, and everyone's taken it by. We deserve a better system. Easier, simpler, and faster. That's how crypto works.
So I don't know, could you hear the volume during the playback?
Yes, we could.
Oh, you could. Okay, so that's it pretty much. I think one of the best explanations I have seen to the layman, in layman terms, of how how money works and the difference that crypto could make to how we can use our value, transfer our value, if they went to all these I would say all these institutions that take away a piece of the pie, every chance, every step you take. So it's really interesting, and we've seen ads, not just this is one from Coinbase. We've seen also some of the ETFs ads that have tried to explain crypto in simple terms, because we're moving into, at least they are trying to move the public into the area where everybody is comfortable with cryptocurrency. We're moving into kind of like the mass adoption phase of cryptocurrency. We're not quite there yet, but all these little bits of information and explanations make it easier for people that are not already in crypto, to show to show them exactly what this is all about, without having to go into difficult explanation about white papers and mathematical functions, etc. Now, things to look up in the near future. Now, there is a stablecoin bill that will go through the Financial Services Committee, and if this passes and it gets approved, could actually set the standard, at least in the US, for what how stable coins are used. And the one very dangerous thing, which at the moment seems to be making its way into the bill, is apparently they want to try and ban algorithmic stablecoins. Okay, so algorithmic stablecoins are the ones that are not based, they don't have the dollar as their base, but they have a basket of assets, a basket of other crypto assets that keep the value, then still keep the value linked to the dollar, but they are not backed by real dollars deposited in a bank, but they're backed by cryptocurrency assets. So that is, if that was to be approved, it would cause a lot of pushback from the crypto world, and with many people that already said that it's unconstitutional. So there could be court cases about this for a while to come. Okay, so and there is actually one that's already started by ConsenSys. ConsenSys is the company behind MetaMask that is suing the SEC and demands the Ethereum be classified as not a security, like just as a as a commodity. And so again, to say Ethereum is not a security and treating it as such will trample on the Fifth Amendment rights and mess with the administrative procedure rights. Now, this is not just a matter of definition, but it is a is a matter of how blockchain in general is seen, because Ethereum wasn't launched first of all as a security, but also there are so many protocols that are built on Ethereum, and it will cause these protocols to be untenable almost overnight if this was to go to go through. But also, he's saying what they're saying is that this has not been legislated, but the SEC basically is claiming authority over Ethereum, and where the legislators haven't actually come up with a definition yet. They haven't defined what if Bitcoin and Ethereum are a security or are commodities. Although it looked like Bitcoin and Ethereum were considered the same at the moment. There is a lot of gray area at the moment. And this will affect, by the way, also MetaMask and any other non-custodial wallet, because if it was a security, then MetaMask would be a brokerage, and these services like staking, for example, would violate security laws. So this is an existential issue for cryptocurrency in general, and this is why ConsenSys is actually going to court over it, because it does affect the whole business model, by the way. Other things. So we discussed about the crypto ETFs that will begin trading in Hong Kong shortly. And another interesting bit of news. I mean, the news this week was mostly about Bitcoin and the halving. There isn't an awful lot to report. But this is like a Turkish branch of BBVA, which is one of the biggest banks in Europe, and they launched what I call the Garanti BBVA Crypto, which is a crypto wallet and transfer service, and now they have also support Avalanche. So you see, now the institutional, so these are kind of the institutional sector. They're starting to do what they do, which is like being intermediaries. And although crypto is coming to the world to basically free people from intermediaries, especially the banks, they're seeing funds flow away from their accounts to crypto wallets and accounts. They want to keep people to their coming to their branch. So if they can't stop crypto, they try and join it and use the relationship that they had with people over time to get them to use them rather than using MetaMask or Binance or something else to deal in the digital assets. Now, this pretty much I've run out of news to discuss with you today. What we might go and have a look at is what opportunities are generated right now, because although, let me just move on to a bigger chart so you can have a look. So, so what's happening is that although Bitcoin is still hovering around within 10% or so of the all-time high, there is still a big difference instead of where the other cryptocurrencies. So this chart is the crypto total market cap, excluding Bitcoin and Ethereum. So where we are right now is about 650 billion, and at the top of the previous bull cycle, it was just short of double this amount. So you can see what Bitcoin, if we were at if we overlay on this one the Bitcoin price, can you see that Bitcoin is now at about roughly very close to his all-time high of the previous cycle, where in this we are now minus, sorry, this is wrong as well. Very nice. So at the moment we are at minus 42% for the altcoins. Okay, so excluding Ethereum as well, we are far away from where Bitcoin is. So there is kind of, especially once Bitcoin, at the moment all the interest is on Bitcoin, and nobody even cares about anything else. But you know how the market works is that normally we get Bitcoin moving first. So everybody's still waiting for something to happen. Kind of like, okay, when are you going to move? When are you going to increase in price? And after that happens, we then get, when Bitcoin stops growing, and then it starts going sideways for a while, and the interest of crypto investors is very fickle generally. So once the Bitcoin price action becomes not interesting anymore, and we see that we've grown an enormous amount in just 2024 alone. We 50% up. If we look at the all-time high is 77%. So obviously that is, while that is happening, all eyes are on Bitcoin. Once that stops, and we don't know at which level it will stop or at least slow down, then there will be the other market will catch up, because can you see here over time? Okay, Bitcoin here moves in December. The altcoins move in February. Okay, so there is a lag between when Bitcoin makes his move and when the other currencies make their move. So again, it's obvious here as well. Here, October we start moving for Bitcoin. It's December we start moving in all coins. Okay, so this is just it's just like quite obvious when you see it. There's always, even if it's only a week, but you can see that the first mover is always Bitcoin, and then you got the others that the other coins that follow. Sometimes they move in tandem, like in this case here, but sometimes it takes time for the altcoins to catch up. So, as I say, none of you actually deserve to get a prize, out of the shocking prediction that we saw last week. But no, it was a good try. So what I was thinking, so this is where we are in the Bitcoin moves that we see. Okay. And there are things that happen sometimes in the charts that we can almost, like, I'm not saying predict the move, but this is where we were looking. So this is what we were looking at, for example, in in a trading class on Wednesday. Okay, so we were saying, okay, price is telling us that there's going to be a breakout here. What we didn't know is, will the breakout be on the way up or on the way down? Okay, in this case, the breakout was on the way down, but the chart, price is talking to us if we know how to read it, and and this is kind of the effect that if you've been looking, you could have then depending on how aggressive you want to be, but you could have gone short from this point or from when you were breaking this point here and taking it down for about 5%. This is like a 5% move, and then now we are again into this kind of long-term range that we've been in since pretty much since we've broken the all-time high, and then the lowest we have been, it just we've been really between 60 and 70 ever since. Okay, so at the moment, yes, you see in the short time frames, you see kind of like big moves, 4% here, 4%, 5% there, but in a bigger time frame, it's just like noise. So this is where we are for the weekly. We had a big, we had a big move here. We had another big move here. At the moment, we're just like resting, waiting for the next big move. Not much is happening. I will give you a small tip as a reward for playing last week. And again, take it with a pinch of salt, please, because this is a small token and it's not even on Binance, by the way. This is Veracity. Okay, so it's one of those things that you can it's a very interesting project, but also if you look at potential in this bull cycle, okay, we were at 1.6 cents in March 2024. Okay, so about a month ago. Let me just change this. Go to a different exchange. I've had it for longer. Okay, and this where we were in 2020, end of 2021. So we were about almost like short on 9 cents. So we are at 0.6 of a cents. 9 cents is 15 times. Okay, so it's not just this is a potential short-term potential. We're going back to this. Now, it's difficult to see when you look at the weekly, but if we go down to the daily, you see we were down here at the low in January was about 0.2 of a cents, and then we have started pushing higher, then we retraced, pushed higher again. Now this one is at the moment, this is the floor. Okay, so 3.7 cents. At the moment we have 5.9. So the way I would play it, I will play this. Okay, and it's very simple, so nothing too complicated, nothing too aggressive either. I will meet for me, I would enter here at about, potentially you could even, I mean, it's not that much difference from where we are right now, but about 56.50. And I would take my profit at 80. Okay. If you are very conservative, you could take your profit at 70. So that will still be you know, a sizable profit. Okay. So at 70 will be 23%. Okay. At 80, it will be about 40%. Okay, so it's not without being too aggressive, not even looking at the yearly high. Okay, you can make some very quick 20 to 40%. And this could be happening in, you know, as soon as there is a little bit of flow of money in Bitcoin, you know, it could happen in 2 or 3 days, it could happen in 2 or 3 weeks. But it's a little tip. Again, if you do take this tip, obviously it's not financial advice, but if you do take this tip, obviously this is a very small token. You find it on Bybit. Obviously, you can buy it through decentralized exchanges. If you want to know where to buy stuff, you just go and bring the token up on CoinGecko like this. Okay, and you scroll down, and this will tells you all the exchanges where you can find it. Okay, so these are as you can see, all the centralized exchanges where you can buy this token. So Binance is not on there, so this is not listed on Binance. And I mean, if it did get listed on Binance, you know, the price would, you know, skyrocket all of a sudden. But you can go and see how many. So this Uniswap, if you want to buy on you know, through your ledger or through MetaMask or something like this. The majority are centralized exchanges. Obviously, they do most of the business, as you can see, and it's in many of the main centralized exchanges, apart from Binance and Kraken. Okay. All right. So that's stop sharing now. That was my tip for the week. So we'll see. We'll have a look next week if that has. I have bought some of that myself. Okay, so I will level with you. Okay, let me see. Any questions? Paul, I don't have numbers for New Zealand. So I don't know, probably, you know, as I say, I'll take your word for it. You say, Stan, the US and UK to be worse than Australia? Well, not quite at the moment. I mean, we're looking at distance as well from the long-term averages. So the thing is that in the past 2 or 3 years, situation has got worse in Australia quite markedly, not so much in the US and the UK. Doesn't mean there's going to be better long-term. At the moment, they are, you know, it is what it is. The numbers, as I said, the numbers don't lie, but especially the US is in an upward trajectory. A lot of it is down to the way the mortgages are used at the end of the day. I know, for example, the UK and the US, you know, fixed rate are used very widely. Not so much in other countries, like, for example, in Europe, they're not. Floating rates are more common in Europe than fixed rates. So this is why we don't see a big difference between how much people are spending on the you know, on their loans, because they follow the interest rates anyway. They don't fix their rate at a certain level for a number of years. And the difference is in the UK and the US is that you know, the rates were low for so long and people have fixed their rate for a number of years, and now they are coming to have to refinance those loans. Okay, and that is being felt right now. Okay, any other question? Now let's do a bit of research. So Eric says, what does Veracity do? It's a good question, Eric. Good question. So let's go and find out. Okay. But don't take my word for it. Where are we? So again, the easiest thing to do, yeah, there is sometimes there is a little description here in directly in CoinGecko. So this is a protocol and product layer platform for esports and video entertainment. So it's basically to take business away from YouTube and reward the people that actually make content. Okay, so rewarding the publishers and players, etc., etc. So it's what is called like proof of view. So it's something that could be could be used extensively. So both there's not just the only platform that's doing that, but we also got Theta as well. That's very active in the video in the video sector. But it's all about getting decentralized offerings that could replace or could attract at least a following to replace the centralized offering of like Google, Microsoft, and so on. But again, so this is a very short definition. And if you want to know more, you can see here there are links. There's a link to their website and also to articles about them in medium.com. So if you go on there and you can, you get the explanation of what this does. You see, Vera Views is an open ledger advertising ecosystem built around Veracity patented proof of view fraud identification technology. So then you go on to learn more, etc., etc. It tells you what what's the business case really, that what's the need that they're trying to address. Okay, so simple setup, eliminate fraud, reduce payment times, and using decentralized technology. And then it goes into detail. But basically, I mean, this tells you as well what they market. So what business use case are they trying to be relevant to gain a little bit of market sharing. And then you can go and read everything you like on their website. So then again, it tells you as well how the wallet works and etc., etc. Does that answer your question, Eric? So it is in the video and advertising space. So the next question is, once you know what they do, what's for example something that you know that's in the space, and it's actually is the browser that I'm using, Brave browser. Brave browser has similar ideas that rewards you for watching ads. And you can have a look. Okay, what has Brave done? I can't remember what's the token. Guys, for some reason I Brave. Oh, BAT Brave attention token. Okay, so basic attention token. There we are. So that's probably a big alternative to Veracity. Okay, and you can have a look at what did it do and what's the potential for their market share. So the market cap at the moment for BAT is 384 million. Okay, and the token is 25 cents. Oh, look at Veracity. So the market cap is 59 million. So if they could get anywhere near, even get like 1/3 of the level of BAT, this would more than double in price, just over that. And it's very as I was saying, sometimes with small tokens, the important thing as usual is to make sure that they got a strong business case and they got a good platform and a good roadmap for the future. But it's a lot easier for a token to go from 50 million to 200 million than there is for something that is 10 billion to go to 30 or 40. So so this is where the opportunities sometimes are with smaller tokens, but also there is a bigger opportunity a big risk of failure. Okay, so you need to do your due diligence, and you ask the right question, but don't just do it by what you see here today. Go and do your own research and see if it's something that's interesting. But in any case, on something like this, you just put a small amount anyway. You wouldn't risk a huge chunk of your portfolio on a small coin on a small coin like this. Okay. Any other question, guys?
Luca,
Yeah.
I'd like to get your view on tokenomics. So I hear if there's a lot of supply or still a lot of tokens that need to hit the market, it's not that good because then there's too much supply. Is that something you look at when choosing coins or researching?
Yes, obviously, yes. You got to look at the tokenomics, and not so much how much supply is still to come in. It's more depending on who has that supply and how is, because if it's all like let's say on a decentralized way, so these tokens are coming into being emitted over time, and they have a certain schedule, that's fine. But if the tokens are in the hands of a few people, this is where you've got to be very, very careful of. This is the thing where I try to stay away from tokens where the ownership is very concentrated. So that's the main thing that I look at, because if you just look at supply, then you think, well, because there's a lot of tokens that still haven't been emitted, then you wouldn't even buy Ethereum, for example. Okay, so there are different metrics that you look at, but it's the ownership probably is one of the most important one. But for me, more than so it wouldn't stop me from buying a project. I'm more interested in what's the business case for that project. Is the team in place, able to deliver, and what are the what projects are competing with them? So those are the main things that I'm looking at, because at the end of the day, it can be a perfect project, but the market that they're playing in is so tiny, and it's not got much chance of growing. It wouldn't matter anyway. It's more like a project in a market that's vibrant and it's growing and it got something innovative, and that's got a lot of potential. And this is what I'm looking at mainly.
Okay, cool. Thank you.
No problem. Okay. Any other questions? No? Okay. Then if you don't have any other question, then we'll stop the call here. I will remind you to go and follow Jonathan and his Cardano session. This starts shortly after this one. Jonathan, if you don't mind, I know that a lot, most of the people here are already been onto your session, but just keep don't let me ask you every time. Just post the link, and so if somebody hasn't been, they can at least try it, and see if they want to make a double bill every Friday, which I would recommend very highly. And by the way, I will respond to your message on Discord and complete that transaction right now when we finish this call. Okay. Okay, guys. So Jonathan has posted the link for those of you that want to attend the session, and I will wish you all a fantastic weekend, and hopefully we can see a little bit of sunshine here in London. Send us some love from the countries that you are, where it's a little bit warmer than here. I think this morning is about 5-6 degrees, so it's not very fun right now. Okay. So have a great time. I will stop recording now. And I need to have a word with is Ray still here or not? Oh, Ray, okay, fine, yeah. I need to have a word with Ray. So if you could please
Okay, thanks very much, Luca.
gently leave the room, and I will catch up with you next week. Bye everyone, have a great weekend.